Hi, welcome to this video day, which is on the 5th of June. It's Wednesday, just to give our updated outlook for the Japanese yen. We're going to be looking at three pairs today: USD JPY, Euro JPY, CAD JPY, and we're going to the charts in a moment. Now, we have looked at these pairs in previous videos, and we're basically holding our positions. We're very bullish of the yen, and so far on these three pairs, we're up around 1,000 pips, but plenty more profit potential to come. Just so heavily bullish of the yen. Now, I'm just going to give my reasons why I'm so bullish the yen, and also some suggested levels of entry, stop and target in case you share my view. Now, we are going to go to the charts and take a look at them, but please do keep in mind it is my view as of right now. It can change in line with the market conditions if you want. All our trading techniques and our daily technical sentiment analysis of 14 Forex pairs. You can click on the link beneath this video and you'll get live access to our member centre. You can also join our free Facebook groups as well. Right, I'm going to go and take a look at the charts, and it's going to be USD JPY first. All right, on the chart of USD JPY daily, and in terms of technicals, I'll do them in a moment. In terms of big trends and holding them, you need to know the fundamentals and sentiment behind the chart. If you don't, then you'll never get big trends because you'll be panicked out by inevitable retracements. And if you know the big fundamentals and sentiment, you know how the big money is flowing, and that's what you need to know if you want to follow big trends. So we always do simple fundamental sentiment analysis, as regular viewers know. I'm just going to go through the yen bullish fundamentals for us. I mean, they're just clear cut. Okay. One, big money flow, domestic and overseas money to Japan. Domestic money that's held overseas, and the Japanese are the world's biggest savers. They've got 500 trillion overseas. They're bringing it back home. Okay, they're going to bring more of it back home. And overseas money is also flowing in to Japan because it's seen as a very safe country to park your money. Okay, in times of when things are not so great in the global economy. It's got the world's second biggest bond market, the JGB market. So a very good place for big institutions to park their money. Global economy is clearly slowing. We've got risk aversion. Global economy is not going to turn around. People talk if trade wars were solved, it would help the global economy. It won't help the slow up. Data's clear. Global economy is in bad shape. The yen, the safest currency of all, the number one safe haven, so it should continue to gain from big money flows. It's also the most oversold G7 currency, so it's going to play catch up. Okay, so that's another positive for it. The only negative you could say for it, which is no longer bearish, is they've got negative rates and stimulus in Japan, but it's its peak now, and points 1, 2, and 3 will basically negate 0.4. Okay, yen just for us very bullish. Now, in terms of the technicals, just for new viewers, the way we've been playing this trade, when it got up to 112 here, we noted that market pretty bullish of the USD, speculators very long, and on the COT, which is our favorite sentiment tool, we saw commercial smart money selling hard, so we sold with them. We break this 20-day moving average, which we always look for to give way in strong trends, okay, or what we think are going to be strong trends, because we're looking for it to hold rally. So when we get beneath it, it does hold it, then we move away from it, an inevitable retracement back to it. 1, 2, 3 touch down, sideways, another touch down. I think I'm very bearish of the USD. I think we're going down to, sorry, I didn't give my levels on the downside. I think we're going down to 104.50, which is actually the base of that candle there, or that tail. It's actually a weekly level as well. So 104.50, then 100. So another 800 odd pips from where we are now. Now, in terms of our profit so far, it's 300 pips. Our entry 111.80. This morning in the member centre, I actually did take half my trade off the table. Okay, very often do that when you're getting a little bit oversold in the short term. Okay, I can always pop it back in on a break lower or a rally back to the 20-day moving average. We're looking for the 20-day moving average to basically hold rallies, and also it will help us place our stop. Okay, so you've got trajectory line there, just 20-day moving average. That will snake down, obviously prices go up. So I've got this level here. There's a possible level to drop my trade back in. Sorry, there we go. So rally up to here, 109.30. Just look for weakness off that level and sell, or you can sell a break of these 3 candle lows. You've got 2 bodies over there. You can see we're just basically above that level. Will I come through straight through those 3 tails for a fresh position? No, I'd wait just a little bit longer and come in through those 2 bodies. I think that's 0760. So just clear of the round number turbulence. So she's a sell on rallies or on a break lower. In terms of stop, we're not moving our stop down really close on this. So we think a rally up to here is probable. We're going to keep our stop back behind 110, which is a key level. Okay, so 110, that is the line in the sand for us. So we're 110.40, but this trade, I think it's got a lot further to run. The end of the day, you are a little bit oversold in the short term. Rally, but I don't see a big one. If we don't rally, just sell it on a break lower. Far lower prices to come. All right, now let's go and take a look at another pair we really like, which is Euro JPY. All right, we're on the chart of Euro JPY daily, and I think in terms of this pair, it's probably got more downside potential than USD JPY. And the reason I say that is because the Euro's fundamentals are terrible. US fundamentals, not great, but way better than Eurozone. And I'm not going to go through the Eurozone fundamentals here. I've already done a video earlier today on Euro USD where I cover them in detail, which you can go and watch, which is the video before this one on our channel. Now, in terms of this pair, the way we've been playing it for new viewers, when we got up here above 126, market was pretty bullish of the euro, but it kind of struggled a bit, so we just sold off through the round number and took a trade through it. Okay, so 125.80. We didn't wait for the 20-day moving average to give way because we were kind of pretty certain it would. So it does. We get one touch there, nearly a touch there, nearly a touch there, but the 20-day has been containing the rally. And yeah, from our point of view, this is 400 pips so far from our entry. But in terms of downside potential, 115.50, can easily get to that level pretty quickly. And I actually do feel we're going to sell off longer term all the way down to 100. Sure, the euro is going to rally, but it's not going to mount a big counter trend rally or a new trend that's going to come in favor of the euro. That's my view anyway. Now, in terms of you want to get in on this trade, I think if you draw a trajectory in there, it'll line up with the 20-day moving average, which I personally feel is pretty good resistance. And you can see a good number of candles there that are relevant in terms of tails and bodies that makes it a double trend line resistance. So my own view is, if I was bearish, I'd have a trade in right now. You can, of course, wait for more weakness. So you could go in through here. That is 120.80. Okay, so I'm skewing my line. It's 120.80, so I'd go in below that 120.70. But yeah, if you're bearish, I think put a trade in now and just add another one on the break. That's the way I would play it. Where would you put your stop? Do not put it straight behind that double trend line. Give it a bit of room. I'm giving it 50 pips up to 122.80. This trade for me, fantastic potential risk to reward, or risk to reward. Just see far lower prices. Now, if I was to be stopped out, which I don't think I will, but now I've said that it might happen, I would just simply sell back through the 20-day moving average with a stop behind 124, which is a massive level of resistance. So yeah, for me, going down a long way, rallies, selling opportunities, or breaks lower. Right, let's do the last of the three pairs, which is going to be, sorry, I forgot what it is. It's CAD JPY. Right, last pair is CAD JPY. And in terms of CAD fundamentals, this one's pretty simple. Japanese yen #1 safe haven currency, Canadian dollar proxy risk currency. What that means for anyone who doesn't know is basically that if you've got a sort of expanding global economy, an economy doing well, the CAD will do well. But when the global economy is not doing so well, the CAD will suffer. I said it earlier, global economy is not in good shape. CAD is going to get hurt. It's already been hurt a little bit, but my target on the downside here is 70, so another 1,000 pips to go. Now, in terms of, just the way we've been playing this trade, again, pretty simply, waited for the test of the 84 level. Noted, speculators trying to push through the level, smart money, short, just came off the level through the 20-day moving average, did get above it once, and then down, and then a little bit back up there. Like I said earlier, don't put your stop right behind the 20. Just go one level back. We went behind this gap here. You can see it. Okay. Now, in terms of getting in on this trade, there's a great way of getting in on it, in my view. And it's basically, if you look at resistance, I think there, okay? You see some support there for the two bodies, couple of tails, body, 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 and this red decisively takes out the level. Come back to touch it today, haven't we? So will it hold? It's resistance, and you've got the 20-day behind. You can wait for a break lower. Okay, just draw trajectory in. Okay, so in terms of double trend line resistance, 20-day move-in average, breakout lower, go through, in my view, 70, 70. Clear of the round number turbulence, and your stop can be back behind this double trend line and the 20-day. Give it a little bit of room, I would say about 80, 80. Our stop at the moment is 82.40, which I want to bring down. On a break lower, just a long way to go on the downside. And again, I don't see a big rally coming in the CAD. Of course, it could come, but rallies are going to be selling opportunities, in my view. This one, actually, I said in the last video, I've got all three commodity currencies short. This one is just under 300 pips. The other two are doing far better, but I've got the biggest allocation on this one. So I picked the wrong allocation for the big one. But hey, it's still a decent profit, and I'm looking for far more to come. I think the CAD could really get motoring to the downside shortly. If I did get stopped down, we did get above 82, I'd just come straight back in on weakness. I don't think that's going to occur, but of course anything can happen in Forex trading, as we know. So there you go. 3 trades all going well, and just for new viewers, always do some simple sentiment and fundamental analysis. It does make your charting simpler, does help you spot big trends, it does help you have the confidence to hold them. The fundamental sentiment analysis I've done has been pretty simple. Anyone can do it, okay? Right, I think that is everything I need to say. Have I missed anything out? I don't think so, hopefully not. That's the video for today. We'll see how these pairs go and update in a future video, or you can follow our pairs obviously in the member center. But videos, that's it for today. Thank you very much for watching me as usual. Take care. Have a good day.